Hello there, this is FairBinaryOptions.com, and we are continuing our Binary Options Academy project. It's with one of the most interesting parts of our educational series projects, namely trading terminology. What does it mean, trading terminology? Well, when you trade or when you look at markets, you look at economic news, or you look at a speech that central bankers members are holding and so on. There are specific terms, or a jargon if you want, economic terms are being used that apply only to financial markets. I will start with the most important ones. First of all, bullish or bearish. Bullish or bearish. What does it mean, bullish or bearish? Well, if you're looking at a market, and let me make this one black, bullish or bearish. If you're looking at a market and you are considering that based on your technical analysis and so on and so forth, price needs to move to the downside, so a put option should be traded, then it is being said that price is bearish. Bearish means to the downside. So let's put this arrow in here, that bearish means to the downside. On the other hand, if you are bullish and you see a trend like this that is channeling really well and so on, and you want to buy call options for a trade, then this is being called bullish price action, or price is bullish, like this. Bullish or bearish refers also to the words that a central bank is using. For example, the ECB, the European Central Bank, is having a press conference every time 45 minutes later the interest rate is being settled, 1.5 months. And at the press conference, or after the press conference, when you read a financial article on Reuters or another news agency, you may find that the tone of the article will be something like President Draghi used a bullish tone, or President Draghi was really bearish when it comes to euro. So this is something that comes from the very nature of trading, up or down, bullish or bearish. What is another important term in these days? Basically, monetary policy. When you trade currencies, or when you trade binary options based on currencies, what happens with the monetary policy of that specific currency is extremely important. Now, monetary policy can be either expanding, or easing, or the monetary policy can of course be tightened. What does it mean? Well, whenever a central bank comes and raises or hikes the interest rates, it is being called that the monetary policy is tightening. That is being viewed as positive for a currency, because everyone wants to own a currency that pays a bigger interest rate. Whenever the interest rate is being cut or lowered, it is being called easing. That the central bank is easing the conditions for that economy, and it is represent a stimulus, or an expanding stimulus for that economy. So monetary policy, expanding or tightening, are two important notions to consider. When it comes to trading, it is everything related to what the central bank is going to do, or the central bank members are going to do when they meet to establish the nature of interest rates. Other terms that come to mind will be shown here on the second part of this video recording. But the decisive term is bullish or bearish. Then when you go with monetary policy and expanding and tightening, there is being called a rate hike. So if you tighten, basically you are hiking the rates. Hiking rates, or when the central bank is actually easing, it is being called cutting rates. cutting rates. Stay tuned for the second part of this educational project to find out more current terms when it comes to monetary policy and when it comes to trading these markets.